Welcome back to Only Stocks. Every once in a while, a company does something so crazy, so bold, you can't help but pay attention. We all saw the Michael Saylor story, how he turned his software company MicroStrategy into a massive bet on Bitcoin and created billions in value for shareholders. It became a legendary play. Also, someone in the comments requested me cover this ticker. People have been asking, who's going to be the MicroStrategy of Ethereum? Well, a little-known sports tech company might have just thrown down the gauntlet and answered that question. Today we are talking about the wild, almost unbelievable story of SharpLink Gaming, ticker symbol SBET. Forget everything you thought you knew about this company. They've just made one of the most radical business pivots I have ever seen. They're not just a gaming tech company anymore. They are on a mission to become the world's largest corporate holder of Ethereum. The stock has already exploded on the news, and they just hired a heavy hitter from BlackRock to lead the charge. So what's the play here? Is this a genius move to unlock shareholder value, or a desperate Hail Mary from a struggling company? Before we get into it, you know the drill. This is not financial advice. This is a high volatility situation, so do your own research. Alright, let's break down the ultimate pivot. So what is SharpLink's new identity? It's pretty simple, and if you've followed the world of crypto, it's a playbook you've seen before. They are trying to become the publicly traded company for Ethereum, just like MicroStrategy is for Bitcoin. Their old sports tech business is no longer the focus. The new strategy is called a digital asset treasury strategy. Here's how it works. SharpLink is using an at-the-market or ATM offering, which allows them to sell new shares of their own stock on an ongoing basis. They take the cash they raise from selling SBET stock and they immediately use it to buy as much Ether, the native token of the Ethereum blockchain, as possible. They then hold this ETH in their corporate treasury and also stake it to earn yield, which generates a small amount of income. And they are not messing around. In just a few weeks, they've become one of the largest corporate holders of ETH in the world, accumulating over 438,000 Ether. They are buying tens of thousands of ETH per week. Essentially, the company is transforming itself into a proxy for Ethereum. The bull case is no longer about their old tech. It's a direct leveraged bet on the future price of Ethereum. The value of the company is now, for all intents and purposes, the value of the crypto it holds, plus a premium for being one of the only ways to get this kind of exposure in a regular stock trading account. So who's actually holding this stock through this insane transformation? Let's talk insiders first. The big story here is the new co-CEO, Joseph Chalom. His compensation is heavily tied to the stock's performance through stock options. This means he's highly motivated to get the share price up. He's not just collecting a salary, he's betting on his own ability to make this strategy work. It's a huge alignment of interest with shareholders. Now for institutions, it's a mixed bag. Many of the original traditional funds that held SBET for its sports tech business have likely sold out, spooked by the wild pivot to crypto. This selling pressure has been offset by a new wave of buyers, crypto-focused VCs, hedge funds, and a massive influx of retail traders who are specifically looking for this kind of exposure. But the most important thing to understand about the money flow is the dilution. To buy all this Ethereum, the company is constantly selling new shares of its own stock. This means the total number of shares is increasing dramatically. So even as the company's ETH holdings go up, each individual share you own represents a smaller and smaller piece of that pie. It's a race. Can the value of their ETH holdings rise faster than they are diluting the stock? That's the core of the financial risk here. When it comes to fundamentals, you have to throw the old rulebook out the window for the new SharpLink. Traditional metrics like price to earnings, price to sales, revenue growth, none of it matters anymore. Their old business is being wound down, and the new business doesn't have sales. It has assets. The only thing that matters now is their balance sheet. And that balance sheet is becoming incredibly simple. On the asset side, you have a massive and growing pile of Ethereum. On the liability side, you have very little. They have almost no debt. The company is basically a clean, publicly traded holding company for ETH. So how do you value it? The new way to analyze SBE is to look at its net asset value, or NAV. You take the total market value of all the Ethereum they own, and you can track this daily. Then you divide that by the total number of SBET shares outstanding. This gives you a baseline value per share of the crypto they hold. The stock will then trade either at a premium or a discount to that NAV. Right now, because of the hype, the new management, and the fact that it's one of the only ways to get this kind of exposure in a stock, SBET is trading at a significant premium to its ETH holdings. The bet is that this premium will hold or even expand as more people want a piece of the action. Alright, let's wrap this up with the bull versus bear case. And for this company, it's one of the clearest you'll ever see. The bull case is simple. You are massively bullish on the price of Ethereum. You believe ETH is going way higher, and you want a leveraged way to play that rally in your stock account. You believe the new co-CEO from BlackRock brings a level of credibility that will attract more big money, causing the stock's premium to its NAV to expand. You see SBET as the new, smarter MicroStrategy for the Ethereum ecosystem. The bear case is just as straightforward. One, you are bearish on Ethereum. If the price of ETH collapses, SBET will collapse even harder. The stock is a direct hostage to the crypto market. Two, the dilution is insane. The company is constantly creating new shares to buy ETH. If the price of ETH goes sideways or down, this constant dilution will absolutely crush the stock price over time. You're betting that the value of ETH they buy can't keep up with the shares they're printing. And three, regulatory risk. A US listed company making such a massive, volatile bet on a single crypto asset could attract unwanted attention from regulators down the line. So what's the final take on SharpLink Gaming? Honestly, this is one of the most unique and high-risk plays on the entire market. It's no longer a company in the traditional sense, it's a financial vehicle. It is a pure leverage bet on the future of Ethereum, wrapped in the shell of a publicly traded company and led by a new co-CEO with a top-tier crypto pedigree. So the real question you got to ask yourself is, who is a stock like this even for? Let's be real, this isn't for your grandpa's retirement account. This isn't a buy and hold for 30 years kind of play. This is a high-conviction, tactical bet. It's for an investor who has already done their research on Ethereum, is fundamentally bullish on its long-term adoption, and is looking for a way to get leveraged exposure to that thesis without having to open a separate crypto account. It's a bet on a specific market narrative with a specific catalyst, the price of ETH. Because it's such a pure proxy play, it also changes how you have to think about it. The success of this stock has almost nothing to do with SharpLink's old business, their execution, or their quarterly earnings. It has everything to do with the macro environment for crypto. You're not just investing in a company, you're essentially hiring their management team with their BlackRock experience to be your personal ETH buyers, using the public markets to fund it. It's a pretty wild concept. The story is incredibly compelling. The potential for explosive returns is obviously there if you believe we're in the early stages of a new crypto bull market. But the risk is just as extreme. This stock will live and die by the price of ETH and the market's willingness to accept the constant dilution. The whole thing is a fascinating experiment, and it might just be the start of a new trend of these crypto proxy companies on the stock market. I want to know what you guys think. Is this pivot by SBET a genius move or a sign of the top? And will we see more companies try to pull this off? Let me know in the comments. If you got some value from this breakdown, hit that like button and subscribe for more deep dives into the craziest stories on the market. See y'all next time.